All right, guys, welcome to another day of investing smarter. There are three income producing multifamily properties that hit the market today. We're going to go ahead, we're going to analyze those and let's see. Hopefully, there's a deal in there. Yesterday, we were able to find a really good deal. I wonder if you guys went out there and took a look at it. I know that I did, and it's still a pretty good deal. So we might be moving forward with that. But with that being said, there are three more today. So before anything, if it's your first time joining us, one of the things that we always look at first is what interest rates we're going to play with. And we always go off of what the Federal Reserve tells us was the average for the last week. And so you can see right here, guys, the average for the last week was actually reported to be a 6.37. It went down just a little bit from the high that it used to be at 6.46, right? Not that long ago, it was 6.5, right? It was even a little bit higher than that before September. So we had been coming down. We were on a really nice streak here. All this stuff here, that was a really, really nice streak. You could see it just going down that way, right? Like down. And then all of a sudden, like the thing with Iran started and it just went like all the way freaking up. But hopefully it continues its downward turn and we start seeing better rates for us. For buyers, obviously that could be good news in terms of, hey, interest rates are going down. But remember, everything has its advantage. Like every negative has a positive and all the positives have negatives, right? When interest rates are really high, it also makes it easier for you to negotiate with the sellers because the sellers now, they're not getting as many offers as before. And if they were getting a good offer before, if it was based on financing, all of a sudden that offer might not exist or it might need to be less. So it gives you room to play as well. So with all that being said, guys, right, let's take a look at the actual market down here in South Florida, Miami, Broward, and Palm Beaches, right? And you can see that in the last 7 days, 2,000 homes have hit the market in the same amount of time. 2,053 homes hit the market. And in the last 7 days, 2,051 homes have seen a price decrease. So it's basically a one-to-one, right? Amount of houses coming onto the market, and then the amount of sellers calling their agents or agents calling their sellers and agreeing to lower the price on existing listings. And so what that should also tell you guys is the probability of new deals that are coming online eventually reducing their prices is pretty freaking high. It's pretty freaking high, okay? And so if we find a deal that's, hey, listen, like if this guy just lowered his price 5, 6, 10%, right? I would say that there's a probability that you could get that deal, right? Because he might not do it right away, or she might not, lower the price right away. But what we're seeing in the market is that it's a one-to-one ratio of the amount of houses coming onto the market and the amount of houses having a price decrease over the same period of time. So I would say if it's a borderline deal, make sure to get in front of that seller, make sure to get in front of that listing agent and present your offer and just keep calling, being like, hey, listen, man, I still have this offer. I still want to make it work. I still want to work with you guys. Hey, I still have this offer. I still want to make it work. I still want to work with you guys, right? And eventually, listen, this guy's going to tell his seller, like, hey, look, I still have this guy. And if that seller is in any way motivated to sell, he might just take you up on your offer, grab the money now, and go find his own deal or go do whatever he wants to do or settle whatever debt he might want to settle instead of continuing to wait for just a little bit more money. So with all that being said, let's go ahead. Let's take a look at the houses that hit the market today. We're going to come down here. We're going to look at the new multifamilies over the last 24 hours. And we can see that 3 houses came up, guys. I like to sort this stuff by square foot. Gives me an idea of what we're going to be looking at. All right. Most of the deals that I find are around the $300 to $400 per square foot range, right? This, so that $351 one, I'm excited to see that. This $410 might be worth it, but I can almost guarantee that this $513 per square foot duplex is not going to be worth it. But nevertheless, let's go ahead. Let's throw it up on the calculator. Let's see what this property could produce. They are selling it for $750,000, okay? They're currently paying $13,395 a year in taxes. Interest rate is not 4.5. That's what we wish it gets to. That's what I think it could probably get to after this whole thing with Iran is really, really concrete, like over. And if we have some kind of like bargaining rights with that Strait of Hormuz where we could benefit in any way between that and Venezuela, I think that, we would be primed for like the economy to just blow up. So 4.5 is what I think it'll get to if that's the case. But right now, the way it is 6 point, what did we say? 36, right? So 6.37, sorry. With that being said, this duplex is not even that big. It's 1,462 square feet, okay? And they don't tell us how much they're collecting in rents, and they don't tell us what flood zone it's in. So let's take a look at the pictures really quick and see what is up. Okay, I think we actually saw this property yesterday. So maybe it hasn't been a whole day since we reviewed this property. So this property was a fail, guys. And if you guys want to see the full analysis on that, just check out yesterday's video. It should be pretty much up by now. So yeah, check out that video, but this property was a big fat fail. So we're gonna go ahead and get rid of it. So there were only really 2 properties up today. This one is, all right, so the price tag is huge. $395, almost $4 million. I can guarantee that this is not gonna be, I mean, it could be a 4-plex all you want, but I don't think that it's a 4-plex. $47,000 they're paying a year in taxes here. Okay, that's so wild. Square feet, 9,615 square feet. That sounds like a commercial lot. Let's take a look. It's in flood zone X. Let's take a look at these pictures. Okay, so this looks like a commercial multifamily, which is not what we review on this channel. We review residential multifamilies, so 2 to 4 units. And yeah, let's look at these pictures just for shits and giggles. Box ACs, you can see it right there. Not great. You know, look at this, guys. You would want this, right, to have like a pan underneath in case that there's any kind of flood, or not flood, but in case any kind of leak, it doesn't start leaking right onto your floor and onto the ceiling of the neighbor downstairs. So yeah, not ideal to have stuff on top of the heater in any case, but you know. Box ACs, box ACs. All right, so we saw everything we got to look. Let's look at the guts of this deal. Okay. So it's 12 units, guys. 12 units and just past the 50-year restart, right? 12 units. They don't tell us what, they say it's 24 bedrooms and 12 bathrooms. Okay, so it's basically telling us it's, you know, and I'm just gonna analyze this just for shits and giggles, guys, because a lot of the metrics that we look at here could also apply to commercial multifamily if you're into that. And so it's worth it, especially with, we don't have a lot of inventory today, to do a little bit of just get repetitions in and get used to analyzing properties, right? That should be the #1 goal for anybody that's like looking to acquire property. It's just getting in the rhythm of, before I even put these numbers in, for you like start saying like, hey, does this make sense, right? So because they don't give us the rents right away, right? What we are left with is actually finding out for ourselves, is this property actually worth it? And so we're actually gonna skip the 1% rule and the DSCR percentage right now, or the rate right now, and we're gonna go straight to the rent checks. And so let's go ahead, let's do that. And our second filter, which is the rent checks, right? It's in Miami-Dade. We know that it's 12, right? Or that these, I think there was 12, right? 12 2-bedroom, 1 bath. Now the product didn't look amazing, but it didn't look terrible. If what we saw is representative of every single unit, then maybe we should be getting, I would say maybe close to 2,300, maybe a little bit less than that if it's 2 ones. Okay, let's say you are able to get $2,000 a piece, right? Now, because there are 12 units and our calculator is only really meant for 4, we're gonna put 3 times that, right? It'll give us 3 here, another 3 here, that's 6, another 3 here, that's 9, and another 3 here, that's 12. So 3 times 2 is 6, so it's gonna be 6, we're gonna put 6 grand here, 6 grand there, 6 grand there, and 6 grand there. Now, guys, right? Before I show you guys the 1% rule, where do you guys think it falls? If they're asking for almost $4 million, do you guys have an idea of how much rent it should be collecting? Right? What's 1% of 4 million? Well, I'll tell you, it's a little bit more than this, that's for sure. We're looking for it to be making at least, or like around at least, right? In that area, in the ballpark, like 90% in that, you know, of 1% of that purchase price. So we would be looking for this property to make about $40,000 a month in rent, and it doesn't. And so this reflects right here. You could see it, right? 24,000 is about 60%, right, of 40,000. So it doesn't really meet that criteria. Now, let's say that the guy could actually get, the whole $2,300. That would mean that it's $2,300 times 6, right? Sorry, times 3. And so that would mean that instead of $6,000, he would collect $6,900, right? But even if we put 6,900, whoops, not 69,000, 6,900, right? And give him that benefit of the doubt, the property still wouldn't be close to that. He'd be just on the borderline where this might be a deal worth looking into, right? But that's him renting at the median, and those properties, I mean, they didn't look really like median-ish to me. It looked a little bit below median, right? And how does that actually translate into your investment? And you guys could see it here. Our third check is comparing this to like investing in the S&P, because I mean, if you're going to be investing, dude, why deal with the headaches of like a roof, a tenant, like all this stuff? Like imagine 12 tenants, guys, 12 tenants, right? Versus you could just put your money in the S&P and it'll grow at 10%. So would you rather just sit on your couch and get that return, right? That 3% every single year? Or would you rather deal with tenants and leaks and headaches and roof replacements and vendors and all that stuff and lease renewals, right? And at best, right, you're going to get like a 9.4 return on your investment. So this property, for that reason, is not working for me at all. I would just go ahead and scrap that, right? You can see here like how much money it would cost you to buy this property. Even if you could buy it FHA, which I don't think this is anywhere near the bounds of FHA purchase limits. But if you could, right, you would be investing $138,000, and then at the end of 30 years, yeah, you would have about $7 million, right? Even though it's not that great of a deal. But the idea is, again, like you could find way better deals where you could leverage your money so much better. And because there are better deals out there, this property for us, anything doing less than 10% is going to be an F. So this property is out. If you guys want to look at the rest of the stuff, right, like it wouldn't cash flow in a while. And this is just, I mean, yeah, even if you put 25% down, like you wouldn't see money actually coming out of this property for you for more than 3 years. So yeah, it's not looking good at all, guys. All right. So we're going to go ahead, get rid of this property, this $4 million deal, and we're going to keep looking. And the last deal for the day is this $749,000. Here we go. Sorry. $749,000 triplex in Miami-Dade County, paying paying $10,007 a year in taxes. Square feet wise, it's 2,130 square feet, so it's decent size, okay? And they said they're collecting $6,400 a month in rent, which is not too shabby. All right, now they're saying that they are in flood zone AE, which is not the best of flood zones, but let's see what this deal has in store. And I'm not sure, I think that we might have seen this. This might have been the deal that actually makes a lot of sense from yesterday. Okay. Box ACs, not a fan of those. Let's look at actually the guts of the deal and see if this property makes any sense whatsoever. Okay. Excellent investment opportunity, income producing property generating $6,400 a month. The main house features 3-bedroom, 1-bath with central AC. The rear building offers 2 separate 1-1 units with different split AC systems. So mini split? No, they were box ACs, bro. Ensuring maximum flexibility and strong ROI, ideal for owner occupants, yada, 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 yada. And so you say that the 4.2s rented for $3,400. And I think that this is the analysis that we did yesterday. And even though, so that it was only really one property different from yesterday. If you guys want to see the full breakdown of this property, again, check out yesterday's video. But because we're live, we're just going to go ahead and just do this again because, man, I don't know. I like analyzing properties. All right. So that being said, it still says 0 days. Like it's been in the market for less than a day. But so just as it stands, guys, right? Before we do any further digging into this property, look at this. All right. So like if you could prove these rents to a bank, the bank would lend money to you all day. Anything above 125% debt service coverage ratio, right? DSCR. So 1.3 or 1.25, anything above 1.25 or 125% of the mortgage, bank would be happy to lend you money, right? On a 25% down payment loan. With that being said, look at where it stands in the 1% rule, right? It's at 0.85. That's not bad. That's not bad, guys. Now let's look at what the actual unit breakdown is. He says that it's a 4.2 and a 1.1. Let's go to our second part of our test and do a rent check. A 4.2, right, at $3,400. I don't have a 4.2 here in the mix, but I do have a 3.2. And the average rent for that, okay, is about $3,000. So he's saying that he's getting $3,400 for the 4.2. That might be accurate, okay? That might be accurate. So let's keep it that way. All right, let's give him the benefit of the doubt. He says it's leased and he doesn't put month to month. So this is a long-term lease. That's awesome. Okay, $3,400. Now, what is he getting for the 1.1s, right? The 1.1s I have on median, you could get $1,600. He says he's getting $1,500 a pop. Okay, so these basically check out, right? He's getting more money than I have actually for the 3.2, but it's a 4.2, right? But maybe you could even get a little bit more money for that. But let's just go ahead and say that, hey, he has them rented out on a month to month. This is probably the best you can do. If that's the case, $6,400, guys, this deal is not bad, okay? This deal gets you a 14%, even with today's interest rates. It gets you a 14% return on your investment, okay? Over the life of the deal. Now, over 30 years, I hope that there's a period where the interest rates are lower than 6%. Right? Just a couple weeks ago, we were at 5.98. If we change that interest rate, guys, to 5.98, look at what happens to your return on your investment, 5.98. It jumps to almost 16%, your return on your investment. And if our buddy, Grant Cardone, is right, and he thinks that interest rates are actually going to drop to 4.5, which I don't think it's unreasonable. I think he's right on the money. After this whole thing with Iran settles down, look what happens to this freaking FHA return on your investment. 24 freaking percent. Are you kidding me? Like, that is ridiculous, okay? Right? You do better when you're using leverage across all of these different financing terms, right? One better than the other. Cash is never going to change because cash is cash, right? But if you could manage to lower the price down, which again, guys, we're seeing people lower prices, right? I think that this could happen. Now, let me double check because I think that there's a really good surprise for this house for buyers, right? We're going to click on this and we're going to come down here. Okay, he doesn't have, this isn't the deal from yesterday. This is a separate deal. It might look like yesterday's deal, but okay. Yeah, he just has a little levy of like $1,000 there. It's not a big deal. Okay. So, guys, look at where we're at with like your return on your investment again, right? If we could lower the price on this guy to $700K, right? All of a sudden, your return on your investment, mind you, for FHA goes through the freaking roof to 30%, okay? For $24,000, it would cost you to be able to get that loan, right? 3.5% of the purchase price. You would be getting $2 million in return. Like, where else can you do that, guys? On year one, your cash on cash return on your 24 grand is going to be 9%. And by year 30, your cash on cash return per year is going to be 467%. It's just ridiculous, right? Now, at today's interest rates of 6.37, it would take you a couple of years, right? More than a couple of years to actually see positive cash flow out of this property. If you buy it at $700,000, okay? Or $749, which is even worse, $749. It would take you a while to cash flow, actually, a long time. But if interest rates were to drop to just 5.9, watch what happens, 5.9. it goes from almost 8 years to 6.5 years. And if Uncle G, Grant Cardone, is right and they drop to 4.5, look what happens. And if you use 10% down payment, you're cash flowing on day one. And if you're using FHA, you're cash flowing after less than 2 years. Okay? And now you might say like, hey, Andres, but I want to cash flow day one. Like, I want to have that money right away. Well, look, I'm not saying that this is an A property. I'm not saying that this is like a home run, go get it, right? Because I don't think that you might be able to negotiate this price down a whole lot. But is it going to build wealth? Dude, it's absolutely going to build wealth. It's going to build like really good wealth, right? Between the cash that you might not be making, right? Because mind you, look at this. You're going to be paying about $90, $91 a month to keep this property. If you rent it completely out, right? You're going to be paying $91 plus if you end up actually living in one of them because it's an FHA, right? Then you're actually going to be paying $1,600 a month, right, to own this almost this $750,000 asset. You're going to be paying less than what you probably pay for rent right now, okay? So you're going to be not having this income, so you're going to have to pay for it, $1,500 plus another $100 here, right? You're down $1,600. But by year 10, this property is going to be paying you over $1,100. And by then, you probably won't even live there, right? So you're going to be making that money. You're not actually going to have to put any money out. This will be cash in your pocket, okay? So, but apart from all that, guys, that's just one aspect of owning property, actually the cash that you get. But there's another aspect to owning property, which is fantastic, and that's the appreciation. Every single year, right? If you go ahead and you do your homework and the property appraises and you buy it for the appraisal price, right? And so they're going to look at the properties around the area and make sure that you're not, buying something you're giving it too much value, right? Then you're going to have almost $750,000 that's going to appreciate by 3% almost every single freaking year. So you're not just having the money that you're collecting from rent, you're also building wealth because the property is appreciating in value itself. Okay? Then on top of that, I mean, all the rent that the property is producing, the 4.2 plus the other bedroom, right? And if you're gonna just be an investor, right? The other one as well, it's paying your principal down. So like, it's like they're putting money in your piggy bank, even though you're not seeing it, they're putting the money in the piggy bank, so your wealth is growing. And lastly, the tax advantage. Remember, you could depreciate. Now you can use depreciation, which is like a technical tax, like a tax actual term, right? Like it's an IRS term. So you could reduce your tax liability every year. And that's also a wealth building attribute that investment properties have. And so yes, this property might not cash flow if you're doing FHA on year one, and if you're doing 10%, you could see it. It's like it's barely there, like zero on the line for how much money the 10% one is making. You're making $60 a month. If you're not living in them, you're making freaking $60 a month. I mean, it might not be worth it, guys. But how much wealth will it create for you that year? Even if you buy this FHA, right? If you were to not live in it, or I mean, you gotta use the money for rent anyway, right? Even if you don't live in it, you're gonna spend money on rent, so might as well live at your property, right? It would make you $25,000, right, a year in wealth. So, I mean, is this property something that would say like, hey, I have not seen any better properties out there? That would be a lie. There are better properties out there. But can you make this deal work? Can you work with a buyer to bring down that price to $700,000? Because at that point, and with a 4.5% interest rate, it would cash flow even on day one. Okay? Look at this, guys. I loved seeing this. Watch this. You're buying FHA. Let's say worst case scenario, $749,000. You're not able to negotiate a penny off of this guy. He's actually pissed off at you, and he says Okay. On day one, this property is going to cost you almost $1,000 a year to keep. Okay. Sorry, $1,000 a month for you to keep this property. By year 10, this property is making you only $300, $320 a year, sorry, a month in rent. By year 20, however, this property is making you $2,166, okay, per month in rent. And by year 30, dude, you're making almost $5,000 on this property per month, okay, per month. And that's with a terrible interest rate and this price, okay? It just goes up. It just goes up. And if you are able to negotiate this, guys, to a 4 point, if you're able to bring the price down to 700, and you're able to buy this at 4.5% interest rate, look at this. Look how much money you're collecting by the time that you're like retiring. Wouldn't it be nice to get like $6,000 a month in rental income? And mind you, the day that you finish selling this off, you're going to make as much money as this cash guy. So year 31, it goes from $5,700 a year, a month in income to basically what this guy's making, which is close to 10 grand. So guys, I mean, this property is it's not the best, but I would say this property is a B, right? Because of the possibility that it has to make you some fantastic freaking money, especially down the road. So with that being said, right now, $750,000 is what he wants for it. It's just a B property, but it has the potential to be an A. Okay, so maybe like, yeah, this is like a B property for me. So if you guys have any questions, let me know. And with that being said, hopefully tomorrow there's more properties that we could go through, and I'll see you guys tomorrow.